Welcome to Truth Group's guide on key property metrics that can help you build a data-driven investment strategy. When it comes to property investing, knowing which metrics to track can be the difference between a good decision and a great one. Here at Truth Group, I make it a priority to base every property investment on solid data. By focusing on key property metrics, I help clients make strategic decisions, monitor portfolio health, and set goals grounded in measurable insights. Let's take a look at the essential metrics every investor should know, along with how Truth Group uses these insights to support your journey to a thriving property portfolio. Metric 1. Rental yield. Let's start with rental yield. Rental yield is a measure of the income a property generates relative to its value. It's a crucial metric for assessing how much rental income you can expect and for comparing properties across different price points or areas. Here's how to calculate it. Step 1. Multiply the weekly rent by 52 weeks to get the annual rental income. For example, a property generating $650 in weekly rent brings in $33,800 a year. Step 2. Divide the annual rental income by the purchase price of the property. Say, for example, it's $650,000 in this case. Step 3. Then multiply by 100 to get your annual rental yield percentage. For instance, 33,800 yearly rental yield divided by 650,000, then you multiply it by 100. This equals a rental yield of 5.2%. I evaluate rental yield as part of an overall investment strategy, balancing it with other metrics like capital growth. If your focus is generating steady cash flow, I may steer you towards areas or property types with higher rental yields, ensuring your property aligns with your financial goals. Metric 2. Vacancy rates. Next we have vacancy rates. Vacancy rate is a percentage of unoccupied properties in a specific area. A low vacancy rate generally signals strong rental demand, while a high rate could mean there's less demand or an oversupply of rental properties. High vacancy rates can lead to rental income loss, which affects cash flow and return on investment. I closely monitor vacancy rates in potential investment areas to help clients select locations with stable or increasing tenant demand. This ensures that your investment has a higher likelihood of staying occupied and generating consistent rental income. Metric 3. Capital growth. Capital growth is another key metric. Capital growth refers to the increase in a property's value over time. Properties with solid capital growth potential allow investors to build equity, which can later be leveraged for future investments. I analyze historical growth trends, market cycles, and infrastructure developments to identify the areas with strong capital growth potential. By selecting properties that are well positioned to appreciate, I help clients build equity faster, giving them options for refinancing or expanding their portfolios. Metric 4. Days on the market. Now let's talk about days on the market, or DOM. Days on the market measures how long properties typically stay listed for before they are sold. A lower DOM suggests higher buyer demand, while a high DOM could indicate a slower market. DOM helps us gauge how easy it might be to sell a property in the future. By tracking DOM in target areas, I assess market dynamics to help clients choose properties likely to be in demand when they're ready to sell. This way your portfolio remains flexible and adaptable to market changes. Metric 5. Population and demographic trends are also critical. Potential growth, age demographics, income levels, and employment rates all impact property demand. Areas with growing populations and rising income levels often experience increased demand for housing and rental properties. I evaluate these demographics to guide investment decisions, identifying suburbs or regions where population and income growth support long-term property appreciation. This data-driven approach ensures that your property investments are well situated to benefit from favorable market conditions. Metric 6. Infrastructure and development plans. Let's move on to infrastructure and development plans. Major projects like new highways, schools, or public transport can increase property demand and boost values in surrounding areas. By staying updated on these projects, I guide clients towards properties that may benefit from future appreciation. Selecting properties in areas with promising infrastructure development maximizes potential for both capital growth and rental income. Metric 7. Cash flow analysis. Finally, there's a cash flow analysis. Cash flow analysis gives a comprehensive look at properties, income and expenses, including rental income, operating costs, financing costs, and potential tax benefits. Positive cash flow is essential for covering expenses and generating income. I run detailed cash flow analysis to ensure properties align with clients' financial objectives. Whether a client is seeking cash flow positive properties or is comfortable with a lower yield for future growth, I tailor strategies to match these goals. At Truth Group, I believe property investment is as much as a science as it is an art. By tracking these essential metrics, I help clients make data-driven decisions that align with their goals and risk tolerance. Whether you're investing in high-yield properties, targeting capital growth, or focusing on a long-term strategy, I'll provide the insights you need to manage and grow your portfolio confidently. And as a mortgage broker, I don't just help you select the right properties, I also work with you to secure the best financing options and structure mortgages that align with your overall strategy, making sure your loans are set up to support both immediate cash flow and long-term growth. If you're ready to take a data-driven approach to property investing and financing, reach out to me today at Truth Group. Together we'll build a plan that meets your goals and brings real value to your investment journey. Thank you for listening, and I look forward to helping you make informed strategic decisions for a robust and profitable portfolio.